Trump renews attack on Federal Reserve Chair Powell. Dow Jones tumbles 1,000 points. Whoa! Should have worn my suit and tie. Yeah, it's been another one of those days. Wow, over the past 2 days, 3 days, it looks like we've wiped out all the gains we got from the tariff pause. So we're back down to like more or less the lowest point since a year ago. Winning. So Trump continuing to talk about removing Powell. Yeah, we talked about that a little bit. Okay, a quick economic refresher for people watching. So the basic gist of it is that the chairman of the Federal Reserve, his job is to make sure the economy doesn't catch on fire. And he has a lot of tools for making sure that the economy doesn't catch on fire. One of his main goals is managing inflation. He really, really, really wants to make sure that inflation stays down at around 2%. It's complicated how you do that. Well, one of the big tools he's got is raising or lowering the interest rate. He sets the bottom floor for how much it costs to borrow money. When the interest rate is high, that's great if you have a bunch of money in savings, because that means that when the bank uses that money to invest elsewhere, you get a lot of return on that, right? 3, 4, 5, 6% savings account year over year interest. However, it's bad for business investment because it's hard to borrow money and rich people love borrowing money. It's also difficult for people who have like mortgages, because if those mortgages get refinanced, they're paying a higher interest rate on the mortgage, because now the bottom line for interest rates is higher. When the interest rate is low, like very low, that makes it easier to borrow money. The cost of borrowing money is much lower. It also means you don't benefit as much from keeping money in savings, because the interest that you get on that money is lower, which incentivizes spending. Also, since the cost of borrowing money is much lower, it's easier for money to spread around. More money spread around, more money going around means potentially higher inflation. So in other words, you raise the interest rate to keep inflation lower, you lower the interest rate to encourage economic activity, but potentially raise the interest rate. The worst thing that can happen is when inflation is high, but at the same time, the economy is stagnant, because in that case, you can't raise or lower the interest rate without causing some kind of downstream economic problem. Mostly correct, Vosh. I honor you with an associate's degree in economics. Yes! Honorary associates? Nope, you can't take it back.
We're following breaking news on Wall Street with stocks tumbling right now. All three indices showing sharp declines today. Let's go live to CNN business and politics correspondent Vanessa Yurkevich. Vanessa, walk us through what's behind this decline.
Well, markets opened rattled this morning because Beijing was essentially putting pressure on their trading partners not to work with the U.S. On essentially not trading with China any longer. And then after that, there was a Truth Social post by President Trump.
Yeah, there have been some big developments along that front, like some serious ones. Wasn't it the China-Australia deal? Big deal. Big deal. Tariff wars halt U.S. beef exports to China as Australia fills the gap. Yes, because of the tariffs, China's not getting their meat from the United States. They're now getting it from Australia. They actually managed to work out a deal, I believe, which some people consider to be like a betrayal of America, but we deserve to be betrayed.
That came out, which sort of rattled markets again, and that's why you're seeing that steep decline. The Dow down 1,100 points now. But you can see the post right there where he's essentially calling on the Federal Reserve to cut rates. This is something that the president really has no power doing. And when he talks about Mr. Too Late, he's talking about the Federal Reserve Chair, Jerome Powell. Over the last week or so, he's really ratcheted up his pressure on the Fed chair, essentially calling for his termination, saying if I could terminate him at some point, I will. The president appointed Jerome Powell in his first term. President Biden re-upped him for his second term. And ultimately, President Trump there, though, saying that he has the power to remove the Fed chair, Jerome Powell. But that is not necessarily the case here. And there's some...
Doesn't really matter, does it? The Supreme Court recently reaffirmed Trump's ability to fire administrative heads, which he is using as a pretext for these threats. But it doesn't matter. Like, it's not like law exists or whatever. Yeah, if Powell gets ousted, the markets will see an upheaval the likes of which you have never seen. And then when interest rates inevitably get lowered in the subsequent, turmoil, you're going to see a huge boom to the market, but it's not going to last long. Rich people really want interest rates down at zero because interest rates down at zero means you can borrow money basically for free. And rich people have a million little tricks that they can use to make money off of borrowing money. They have a lot of, they love to borrow money and then speculate and short the market, borrow and then buy futures and then pay back the loans with the margins that you get from buying the future. They've got a million tricks. I don't know how they all work. Okay. I'm not rich. I'm not a sociopath. They love that. Problem is inflation would skyrocket. It'd be very, very, very bad for everyone except for like a bunch of lucky gamblers.
Legal precedent for that says that the president does not have the authority to remove the chair of the Federal Reserve unless there are three sort of different qualifications: inefficiency, neglect of duty, malfeasance of office. So that is why there's so much question about whether or not the president has the power to make this move. But this is why you see markets rattled right now, because the Federal Reserve is an independent body from the government, and it acts sort of as a safety net for the U.S. economy. And when you have the president threatening to remove the Federal Reserve chair or trying to direct the Federal Reserve to make any sort of monetary policy, that rattles investors and traders.
Worth noting that even now, as market investment goes down and the stock market tumbles, we are still seeing a general rise in the 10-year bond yield, which again means that people aren't moving money out of the markets and into the Treasury. They're just removing their money, which is a really bad sign for the economy.
Who see this Federal Reserve Bank as sort of an independent catch-all for potential issues with the economy. And one of those issues, Boris, as you know, that is playing out right now is this global trade war. Many economists believe that this trade war, as it escalates, will increase prices for everyday consumers. And the Federal Reserve really is the sort of counteractive in that, the body that can help try to bring down prices if that were to happen. So traders, investors nervous about this language that they're seeing from the president right now. The next time the Fed will meet is in May, and that is when they will make that policy decision about interest rates. But it is up to the Federal Reserve. It is not up to the President of the United States to make those directives.
Well, that would be if we lived in a country with laws. You know. Yeah, wow. This is the 20-year Treasury yield holding steady here. See, we have a little dip in the it just went up again. See that? Right before our eyes? Doop. Now it's back at the highest level since. Ooh. Little dip. That's pretty high right now, considering how many people are pulling the money out of the stock market. I don't know. The dollar also tumbled to its 3-year lowest. Wow, 3-year? Yeah, DYX overview. Or DXY. Ooh, I don't know. Guys, my tummy hurts. I need to start opening some retirement accounts in Swiss francs or something. Ooh, I don't know about this one, guys. I'm tired, boss. I don't feel so good, Mr. Powell. Oh, man. Buy the dip. Yeah, you know there's like some Chinese businessman out there who's like, if we dump all the yuan into USD right now, we're going to make a huge return a year from now. Invest in copper. I hate to be that guy because I legit hate them, but best bet right now is actually gold. Yeah, it's kind of, but I think you might be right. If we're looking at like a stagflation, where the USD is down, Treasury yields are up, and the market is down, like it might actually be, it might actually be gold time. That's crazy. U.S. bonds suffered 5th consecutive week outflow of money from U.S. bonds. Man. Yeah, look, gold and uncertainty are the only things going up right now. Gold's going up at least 6 months. Look at that. That's not great for the economy. It's been skyrocketing since the tariffs. Oh, man. Can you explain the DXY chart? It's just the value of the dollar, like, against global averages. That means stock money is going to gold? Yep. Or different, or even more terrifyingly, different currencies. That's the ultimate blow against like the stability of the US dollar, right? If the money's being dumped, the government's just holding onto their bonds, and everyone's just going and buying like yen or won or francs or euros or something. This is giving me a damn tummy ache, man. Dollar down 10% year to date. We're only midway through quarter two. Come on, man. Yeah, it's giving me indigestion. This might bring up tourism, though. That's true. If you don't get detained at the border, it might bring up tourism. China pulling back from U.S. private equity. I would also be doing that if I was them. Thank you for the link. Industry executives report change of approach as Beijing bears brunt of Trump's tariffs. State-backed funds cutting off new investment in U.S. private equity. Oh, guys, they might be holding frame. Guys, fuck. Financial Times, who the pays $75? Financial Times, unironically, is probably the best paper to be reading right now. It's just expensive. I don't know, man. Let's just read more about what Dear Leader has done.
Now by Joe Weisenthal. He's the co-host of Bloomberg's Odd Lots podcast. Joe, thanks for being with us. Let's start on how markets have responded to this spat with Powell. You actually posed the question of what Trump would get from firing him. Isn't the answer that simply he would get a Fed chair who would do what he says, a more subservient
This guy looks very easy
chair?
to draw.
He might. And that's probably what he has in mind if you were to go through with firing him. But the point that I want to make, and the point that I think maybe markets are reflecting is, okay, you could imagine Powell being replaced by someone who is quicker to lower rates at signs of volatility or quicker to lower rates at signs of economic slowdown. But the investors in markets, their fear about inflation, their fear about the short-term inflation due to tariffs, they're concerned about, sort of long-term rise in inflation expectations. And there's the risk, and there's the very real possibility that even if you got a Fed chair who was willing to push through, and bear in mind, there's 12 members of the FOMC, so you can't unilaterally push through lower rates. Even if you got a Fed chair who was able to immediately push through lower rates, that might be seen as more inflationary. And then the market might think, okay, well, now we have to raise rates further and harder into the future. And that's how you get the rates at the long end. And those rates at the long end, say a 10-year yield, that's what your mortgage is priced off of, something like that. So even getting in like a true lackey wouldn't necessarily stimulate the economy in perhaps the way that Trump is imagining. What it would do, though, is weaken the expectation that the U.S. has an independent central bank, which is sort of like one of the foundational elements of global macroeconomic policy.
Yeah, that's completely true. The independence of the Fed is massive for global stability because the Fed's policies heavily affect the dollar, and since the dollar is the global reserve currency, that's really important to everyone, right? And America is very politically unstable, right? We have a new election every 4 years, and every time the new guy comes in, he wants to undo the last guy, right? The independence of the Fed has been one of the things that allows the dollar to function as the global reserve currency. Nobody would want it as the global reserve currency if they thought that the Fed operated as tumultuously as the White House does, Like, no one would want that. So what Trump's doing right now is pretty crazy. Pretty wacky. And all of the financial people, right? All the people who actually like follow finance with any understanding of it, which I mean, I don't, but they're like flop sweating like crazy right now. Buying gold, buying retirement accounts in Swiss francs, whatever. But there are a lot of crazy people on Wall Street who have just drank the Kool-Aid and really do think that Trump is going to make it all work for them. I don't know, man. I don't know.
We're back with the breaking news. Take a look at the Dow, down about 3% right now, almost 1,200 points. Markets falling after President Trump once again criticized the Federal Reserve Chair, Jerome Powell, calling him a loser. NBC's Brian Chung is here following this for us. What's happening here?
Yeah, well, we can see the Dow Jones down over 3%. By the way, I want to point out over the last month, the Dow Jones is down 9.6%. So it has not been pretty for anyone that's been checking their portfolios. But it seems like the market action today is really hinged to
You're
those
somewhat
remarks
leaner
from
than
the
I
president
expected.
via Truth Social this morning, where he again doubled down on this rhetoric that he's been harping on over the last week of being disappointed with Federal Reserve Chairman Jerome Powell's action on Federal Reserve interest rates, or maybe lack thereof, because the Fed hasn't done anything, hasn't changed interest rates in their last few meetings. But the president clearly urging the Federal Reserve to lower interest rates, describing Mr. Powell as, quote, Mr. Too Late, saying he's a major loser. He said Powell has always been too late, spelling the word too wrong. But I want to point out here that the Fed chairman, Jerome Powell, who, by the way, was put into that position by President Trump during his first term, is used to this type of bashing publicly. We have to remember, even during the 2018-2019 trade war with China that the president was waging during his first term, he described Jerome Powell as having no touch. He can't putt. He described in 2019 that Jerome Powell was, quote, like a stubborn child. So I know that when people see these headlines...
There is a difference between this administration and that, though, because in the first Trump administration, if Trump ever tried to do something as crazy as fire Powell, every single neocon in his cabinet would have hit like the red button underneath their desk that deploys a fresh blueberry pie to a nearby windowsill so Trump can be distracted by the wafting aroma and lured to it. Like, they would have done something to keep his hands off Powell. Now, there are no neocons in the cabinet to press the button.
And say, whoa, this is a big deal that the president is calling his own Fed chair a loser. But Jerome Powell is pretty used to this. I think the question here is, does the Fed get tilted at some point into having to lower interest rates? That did happen in 2018, 2019, when financial markets were out of control, as well as the concerns about the economy substantially deteriorating as a result of these tariffs. I mean, this is all kind of deja vu, Chris, and you do wonder whether or not a similar situation is going to play out here. But clearly, investors pretty grappled by it.
Well, yeah, the fact that it is not anything new for him to attack Jerome Powell. It is years, but even recently, in recent weeks, he seems to be every couple of days has something negative to say about Jerome Powell. Why such a negative reaction in the markets?
Yeah, well, I think it's because
Powell seems to be almost inhumanly professional. You have to be that guy to run the Fed, again, because the whole world looks to you as the arbiter of a stable global reserve currency. Like, as the head of the Fed, your job is to be somebody who is so dependable that literally the entire global economy continues to operate at your whim. Like, you are insanely powerful, but in a way, you're also kind of like powerless, because you're meant to be like a diligent technocrat. You're meant to be like a dutiful little arbitrator, you know? And Powell has been a good Federal Reserve chairman, right? To the extent that that position can be a good thing. He's done his job. He's not a crazy ideologue, which is the problem. The Fox News / business channels on YouTube have no videos about the stock market right now. It's kind of funny. That makes sense.
Because you already have the uncertainty of the tariff policy. We've been talking over the past few weeks that if you're a small business, if you're just a household trying to budget out for the next few months, it is really unclear the impact of these tariffs. So you're going to be very, kind of hunkering down. You might be putting more money into your savings. That could lead to a contraction in economic activity. Compile on top of that the concerns over the steward of the U.S. economy.
It does kind of make you wonder how the Nazis would have done if back then they had the kind of economy that we have today, you know? Like, they rebound from the Great Depression. What could, like, so how do you do, like, hyper ultra nationalism? They would have, like, tariffed everyone, all German industry, obviously, because that's, like, a necessary part of the ideology, of the rhetoric. It seems like they kind of would have faltered, right? Because you can't do that then. What they did, this, like, this massive reindustrialization, it doesn't work the same way anymore. The economy is just too global. You can't isolate yourself while also being like engaging in massive industrial growth. It just doesn't work that way. Just interesting to think about.
the Federal Reserve Chairman, who, as the head of the central bank, levers interest rates to try to steer the economy clear of a recession. If you don't know if that person's going to be in that job in the next few months, that is definitely something that just introduces another layer of uncertainty. Although I should point out there's legal ambiguity over whether or not the president has the authority to fire Jerome Powell. The president did post on Truth Social last week that his termination can't come soon enough, referring to the Fed chairman. His term ends May of next year, but maybe there's this concern that he could try to boot him and spur that legal challenge earlier than that.
Brian Chung, thank you.
There's no legal ambiguity. He literally can't do it. I mean, he's done lots of things he literally can't do. Hitler's terrible tariffs. I would like to learn more about Hitler's terrible tariffs, though probably not right now. I'd be interested in learning about that. I keep wondering when we'll see prices spike. It does seem like, for right now at least, corporations are still holding back on those price hikes because they're operating with the hope that he's going to pull back. That seems to be the case. Like, it seems like people are still wondering, like, it's all going to be a joke, right? Haha, you know? They still have inventory too? Yes, that's a good point. A lot of companies, especially the ones with the money to do so, they started bulk ordering in the lead up to the tariffs because they wanted to bring them all in before the price jumped. So they're still working off the inventory they got in the country beforehand. But that's not going to be that way for long. Like, at all. It's going to be pretty soon it's not going to be that way. What's the most you'd pay for a Big Mac? 0. I don't really like Big Macs. I'm sorry. I can't stand the texture of that kind of like low-grade fast food meat. Don't like the tendies. I don't like it. Their fries suck. I'm sorry. You know, I just don't like that fast food. What, McDonald's fries do not suck? I genuinely don't understand how people have that opinion. I think that McDonald's fries are genuinely like terrible, like borderline inedible. Flavorless, unappealing texture, no real like creamy potato center because they're too thin, but no crunch or crackle on the outside because they don't. I'm sorry. But it's a personal preference. I'm not going to argue with you guys on it. You can think what you think. I'm just saying, like, I don't like them. You can know that about my position. I'm fine. What's your opinion on Five Guys and Shake Shack? I haven't been to Shake Shack, and Five Guys is good, but it's pretty damn greasy. I do like the peanuts. How about Steak and Shake? Well, I'm very racist, so I do like Steak and Shake for, like, ideological reasons.